Welcome, financial professionals. I am Todd Scott, Regional Vice President here at E4 Insurance Services, welcoming you to the Brew, building relationships every week. Thank you for tuning in. For those of you joining the Brew for the first time, welcome. We like to start the Brewcast by celebrating today's national days. Today's National Homemade Cookie Day. Today is International Music and International Walk to School today. So hopefully those children walk to school today. Today we are kicking off October's lineup on leveraging the power of annuities. Chris Marcozzi, VP Sales, Independent Channel of Global Atlantic, is here with me for an in-depth conversation on annuity strategies designed for both growth and protection. We encourage you to use the chat box or raise your hand for questions. All attendees are entered into a drawing for a CE voucher and a Starbucks gift card, and we will announce the winner at the end. Thank you, Chris, for joining us today. Can you tell me a little bit about Global Atlantic?
Absolutely, Todd. Thanks so much for having me, and was not aware that it was National Cookie Day, so I am getting hungry here on the call, and then here in the walk to school day, I'm hearing my dad say when he would walk to school, it was always uphill both ways. So
sure.
A couple of real fun facts there, and thanks for having me on the call. Really appreciate being here with you and the team at E4. I'm Chris Marcozzi. I've been with Global Atlantic for over 11 years now in the industry, selling annuities for about 15, and just couldn't be happier to be not only where I am with my company, but also the industry, right? What we do and the value and the proposition we provide to financial professionals and clients. What we do ultimately is help them reach, attain, and maintain their goals in and throughout retirement. So what I plan to do here today with the short time that we have, and again, we have a lot that I could talk about, right? But I want to focus on a few areas, and Todd had mentioned, accumulation and legacy growth with protection. The key there is the protection, right? That's ultimately the value that annuities provide that other asset classes simply really cannot. So we're going to walk through some of that, but where I'd like to start, and Todd, you asked me to kind of talk a little bit about who Global Atlantic is. I'll go back to kind of where it started, right? We were founded in 2004 at Goldman Sachs, really as their insurance arm there. 2013 separated into its own company. And from there, it's been just a growth story through and through. Most recently, kind of capitalized on with the partnership with KKR. Cultures aligned. We're taking their investment expertise versus the distribution model that we had and really marrying that together to provide some best-in-class strategies that you all can ultimately go and deliver to your clients. So you'll see from a rating standpoint, strongly rated, A-rated across the board, positive outlooks in most of these. The way we look at growth is, yes, we want to grow, but we want to do it in a long-term sustainable way, which sounds great for us and for me here, but ultimately it's consistent returns, consistent value proposition for our clients and policyholders. That's really why we operate in the way that we do. So here I'll just kind of lay out everything that we have to offer. I know I mentioned, the focus of this month's calls are annuities is what really all we do, but annuities can come in a lot of different flavors, different objectives, goals, strategies that we use to utilize it. So just for the sake of time, I want time to go through everything on the screen here. Maybe I'll jump back in the future here for another live brew. If Todd will have me back and the team there, I'd be happy to do it. We're going to focus on accumulation and legacy growth today, but I'll just quickly walk kind of left to right here. We have a great fixed annuity long-term care strategy. And I'll just mention that if you're not having this long-term care conversation with your clients, there's a good chance that somebody else probably is. And maybe you have a life insurance background. This is a nice entry point into the annuity space. The simple fixed annuity with a long-term care rider that will double or triple your client's contract value for a tax-free long-term care benefit. Great strategy there. On just the plain fixed annuity side, clients, they don't want many bells, whistles. They just want to know they have a safe, CD type alternative strategy with more earning potential and tax deferral. We have a great fixed annuity in 3, 5, and 7-year terms. And then also our 4CERT, and that's our SPIA, our immediate annuity for clients that simply want a income stream, whether that's for a guaranteed period, a number of years, or for their lifetime. Have a really strong strategy there. On the fixed index annuity side, now that's ultimately where I spend most of my time, and really where I think a lot of the value proposition is in the industry today. I don't think we've ever been in a better position, at least in my time here, from a pricing standpoint, where benefits are at, where rates are at. Really strong, earning potential, income potential for clients that are, looking to purchase an annuity and do so today. And given where interest rates are and where they may be headed, I can't say how long that's going to go on for. Hopefully it will hold true. I still think they'll be good, but right now, just a really strong value proposition there. So on the index annuity side, we have strategies that are, for the purpose of today's call, where we're going to focus for accumulation. Growing, tax deferred, no downside risk, and the ability to grow legacy assets as well. And I'll walk through what that looks like. Also have on the income side, clients that want to maintain control of their contract value, not annuitize, but create strong guaranteed lifetime income. Have two really great strategies there that, again, for the sake of time, won't touch on here today, but income 150 plus and 4 income 2 for clients that are looking to maximize guaranteed lifetime income. Maybe it's they want to supplement Social Security and make up some of the gap there. The two great strategies there to utilize. So I want to move into our accumulation portfolio. And sorry, I just jumped ahead one slide too far there. I'm going to walk left to right here. I know we're highlighting the premium bonus. We'll get to that in a second, but I want to talk about the base product. When I say base product, this is really just the FIA story, right? It's a fixed index annuity. Can't lose a penny. What you put in is at least what you'll get back, as long as you don't take out any withdrawals, and you have the ability to tie that to a cap for the S&P, for example. Maybe it's 9.5%, 10%. The client will earn anywhere between 0 and 10 in that example. But the key there is you really win by not losing. So these are for clients that are getting close to retirement. They had that nest egg. They've grown it over time. They want to protect it and grow it and not have to kind of make up for lost time, make up for losses, because they simply don't have the time to do so. So our base product there, really strong product offerings, pricing offerings, and crediting opportunities there. One thing we do hang our hat on at Global Atlantic is our rate renewal consistency. That is one thing that clients that don't always get with certain carriers. I certainly won't name any, but most of these rates are guaranteed for a period of 1 year, and we do the same. But what we've done is we published this. We've renewed clients at the same rates, caps, spreads that they got at issue about 99% of the time for the length of their surrender period. So what that means is, we're putting something in front of a client with an expectation that whatever they got at day one is what they should be getting throughout the life of their contract and their surrender period. So really proud of our rate renewal history. Moving on to the premium bonus, this really is one of our more popular strategies. That's not a typo, folks. That's 14% premium bonus. That's a cash bonus that gets put into the client's account on day one. That's at 14%. Example, you put in $100,000 on day one, and their contract value is at $114,000. And then from there, it'll earn just like a regular fixed indexed annuity. There'll be a little bit of a trade-off from the caps that you'll have from the non-bonus option. Let's say the cap on the base product is 10. We utilize the bonus. Maybe it's around 6, right? But you're trading that off there. The potential to get that cap for the guarantee, that day one 14%. So see this utilized a lot for clients that maybe they saw a dip in the market and they just don't want to have it take the time that it does to recoup that. They just want, I lost 10% in my account. I want to earn that back and then some. Utilize the 14% premium bonus there. Also see it utilized for clients that are in other annuity contracts. Maybe they're not getting the returns or the rate renewal experience that they were expecting. So we can actually utilize that premium bonus to offset a potential surrender charge, put them positive, give them better rates, get them out of a contract that's underperforming, that is not having a great renewal experience, and put them into something that has more growth potential. And they're also able to offset any adverse surrender charges. The way I position annuities is whatever surrender term you're going into, let's plan to keep it there with the carry for at least that amount of time, if not longer. I never want any client to pay an unnecessary surrender charge, but sometimes their hands are forced a little bit, in the sense that they don't have a say over what their rates are, and they kind of have to move it out, and they're able to utilize our premium bonus to offset a surrender. And so I'll give you an example. Let's say surrender is 4%, right? Client doesn't want to take a 4% hit, but they're not getting a good rate where they're at. As long as the contract's been enforced for at least 2 years, we can take this 14% bonus, offset that 4% surrender, and actually put them ahead by a positive 10%. So just as a quick idea there to go to your clients with, as a way to reposition some of those assets. Our growth accelerator, this, I'll be honest, isn't, just with how strong rates are right now, isn't a strategy that I talk about all that often. But I do think as rates, caps, par rates do come down, what this option does is gives you the ability for higher earning potential, but you're adding a fee onto the contract. And one thing I actually haven't mentioned yet is outside of these optional riders, the base product, the premium bonus, that comes with no fee. It's also one of the great advantages of an FIA is there's no downside loss potential, and there's also no fees. So not like a VA where there's fees, not like other products with riders where there's fees. That's just no fees. There would be one here if you do decide to add this growth accelerator option for clients that maybe want a little more upside potential than they currently have, and they're willing to pay a small fee to get there. I want to leave a good amount of time here for our enhanced death benefit. You'll see that this is now at 10%. We actually increased that in July. So simply put, this is great if you, again, maybe you're a life insurance producer and maybe you have some clients that are uninsurable. I see this utilized a lot for clients that, they can't get rated for life insurance, can't get approved. Use this enhanced death benefit. It rolls up by 10% in simple growth for up to 15 years or until the client reaches age 90, for a way to maximize legacy assets that are passing on to the next generation, to a church, to a charity, wherever the client would want it to go to. So really strong opportunity here to create guaranteed death benefit and legacy growth for your clients. And again, kind of going back to the theme of the call, is all this is with protection. None of this is subject to market risk. This is in this example, the death benefit is guaranteed per the contract. We got 10% for 15 years. This one would also come with an additional cost. But again, if it's legacy assets, the contract value, the cost doesn't matter as much as the guaranteed legacy that we're going to provide. I'll just share a quick story. One of the offices that I work with, they did do a good bit of life insurance business. I think we went through their books. They had about over 500 clients that had been declined, that they tried to get underwritten for life insurance that were declined. Those are immediate opportunities that they had. They made a call list, went through every single client there and said, hey, I know we couldn't get you life insurance coverage based on, your health history, X, Y, or Z. We now have this option here that, it was at 7% roll up. Now it's at 10% for you to still create, maximize your legacy assets without any underwriting. We'll get you this. We can guarantee your return from a legacy standpoint. Is this something that you'd be interested in? And I gotta say, at this point, they haven't got through the full list yet, but at least half of every person they're getting live on the phone is at least willing to kind of put their information down, get an illustration going, and talk about this opportunity. So great strategy there for legacy growth with protection. And then also, it's very RMD friendly. What we mean by that is clients that have assets, whether it's, let's say it's a fixed annuity, any qualified assets, they're pulling the RMDs out because they have to. This is a great strategy to satisfy those RMD requirements while still growing that enhanced death benefit by that guaranteed 10%. So do want to share just a quick example on the screen here of a 70-year-old client, again, really getting close to RMD age at 73. Let's say they have $300,000 in, let's call it a fixed income allocation in their managed portfolio. They're going to have to pull RMDs out of that account to satisfy the IRS requirements. So what if they took that $300,000, repositioned it into this for accumulation 2, added on the enhanced death benefit? You'll see if we go left to right, RMDs by year, what they're taking out, the cumulative of that after, in this case, 20 years, and the guaranteed death benefit that continued to grow while you were satisfying those RMD requirements. So from age 73 to 90, the client took out $233,000 in RMDs, still grew their death benefit to $425,000. You add those together, the total benefit of ownership of this contract was almost $660,000. It's the cumulative withdrawals they already took, plus the guaranteed death benefit that they're going to leave behind when the client passes away. So really strong story there to use really just a simple annuity death benefit, but in a unique way to help offset the drag that RMDs may have on a portfolio. Again, walking through the for accumulation 2, we started with the base product, no loss, no fees, earning potential, all the way through this enhanced death benefit. This is one product that you can use in a lot of different ways to meet several different objectives. As I mentioned, we have, our screen got stuck a little bit. I'm just going to show you globalatlantic.com/professionals. We have materials here for all of this. I'm sure Todd will kind of share my information after the call here. There weren't too many slides that I wanted to go through. I was going to show you some of those pieces, but I'd rather honestly walk through them with you live whenever you have a few minutes. So globalatlantic.com/professionals. We have pieces on all these different strategies. We have calculators where we can plug in client information on the spot, create income proposals that are easily digestible for your clients, as well as just general, here we go, just general pieces, point of sale materials, positioning materials, just to help you articulate, what's going on in the market and how annuities may fit some of those strategies. Also have a great database of just general non-product specific material through our Thriving Practice, right? What words should I use when I talk with clients to maximize, getting them into what we call the buying zone, that they're comfortable with, moving forward with an annuity strategy. Great advanced markets resource. Maybe I'm getting questions on inherited IRAs or non-qualified stretches, or a different, tax law that the IRS is updating. So a lot of different tools that we want to put in your hands just to really empower you, make you more confident in having these conversations with your financial professionals, with your clients. And it's all available again at globalatlantic.com/professionals. So with that, Todd, I'm going to wrap up the prepared comments, hoping maybe we got a question or two. I'm happy to take any from you or anyone on the call.
So yes, Chris, we do have 2 questions. First question, on the 14% bonus, does it have a fixed account that the client could put the assets in the first year? And what would the first year yield be?
Yes, there is. You do a fixed rate option. I'm pulling up the current rates. We're in a dynamic rate environment. Great question. With the fixed account, it is 3.25. So okay. The line there is you get, in the first year, you're guaranteed to have, plus 17% return guaranteed, because you have that fixed bucket plus the bonus.
Great. And the next question is there a rider or an option to withdraw funds for LTC benefit?
So we have the ForCare product that I kind of led off with. That's obviously designed to use for long-term care. Is there an option now on our income products? We do have an income enhancement feature where we'll double your lifetime income for 5 years if you have an LTC need. We're asking about the annuity that I went through, the Accumulation 2 product. We have a 10% free withdrawal for any reason. And then there would also be a terminal illness or nursing home waiver that the client could get out without a penalty if they were confined to a nursing home or diagnosed with a terminal illness. I hope that answers the question.
Great. All right, at this time, I don't see any more questions, and that did answer the question. So as we wrap up, I'd like to remind you that today's brew and entire library are recorded and shared on the brew page on our website at www.e4.insurance. Don't forget to subscribe to our YouTube channel to keep up with all the brewcasts. They are released every Wednesday. Now for the giveaway. Chris, can you pick a number between 1 and 50?
You want me to say that loud?
Yeah.
12.
12. All right. Now the winner is Al Berg. The winner today, congratulations. Be on the lookout for a complimentary CE voucher and a Starbucks gift card that will be coming your way from all of us at E4 Insurance Services. Next week, the brew will be released at 10 a.m. Central Time. I will be joined by Greg Spieth, Chief Strategic Initiative Officer at E4 Insurance Services, to discuss how simple, relatable math can spark new conversations and reveal hidden needs while offering practical income generating solutions that truly connect with your clients. Thanks, everyone, and we will see you next week on The Brew.